After the deluge of results releases, central bank decisions and dividend updates in late July and early August, we've a quieter week ahead of us, but it should be no less informative for that. From a top-down point of view, we have two interesting snippets from the UK economy. The first is the latest batch of inflation data on Wednesday the 19th of August, and the second is the latest reading for the monthly consumer confidence reading from consultants GfK. That's due on Friday the 21st. To start with inflation, the reading for June was 0.9%, according to the Bank of England's preferred CPIH indicator, which is the consumer price index that includes owner-occupiers' housing costs. That 0.9% number represented a tiny increase on the prior month, thanks to increases in games and clothing, which offset decreases in prices of food. The plain consumer price index, or CPI, excluding housing costs, rose just 0.6% year on year. Fuel costs may have gone up a little bit this time around, and it'll be interesting to see if any other costs start to tick up because of the effects of the pandemic, or the Bank of England's money printing, or the government spending an increased budget deficit. Look at how inflation expectations in America are slowly ticking up. This matters because inflation could hurt consumer confidence if it starts to leave wage growth well behind. Thankfully, there's no sign of that yet, but consumer confidence is still depressed, as you might expect given the circumstances. The last reading, according to the monthly GfK survey, was minus 27 for July, even as the lockdown began to ease and pubs began to open. Retailers, restaurateurs and leisure groups will all be hoping to see some further improvement here. On the company front, a handful of FTSE 100 firms and a selection of mid and small cap stocks are due to release first half or full year results. They include mining giant BHP on Monday the 17th of August, house builder Persimmon, auto parts specialist TI Fluid Systems, and oil services equipment firm Wood Group on the 18th, silver miner Hochschild on the 19th, and building materials firm CRH on the 20th. But for me, the company most capable of causing a fuss in the week ahead is Antofagasta. The company, which mines copper at 4 different sites in the Antofagasta and Coquimbo regions of Chile, reports its first half figures on Thursday the 20th of August. This should be an insightful report, not least because the company's key product is often seen as a key indicator to global economic well-being, hence its nickname, Dr. Copper. This is because the metal is malleable, a good conductor and ductile, so its many uses in manufacturing, industry and construction. And as we can see here, copper's role as a guide to the economy means it can also be one useful indicator for students of the stock market. You could argue that the copper price and the FTSE All World Equity Index have some kind of relationship. You might also expect the copper price to influence Antofagasta's share price, and it's fair to say you'd probably be right, although the past is, of course, not a reliable guide to the future. Besides the copper price itself, there are other factors which will influence Antofagasta's results. At its annual general meeting in May, the miner flagged the danger of a COVID-19 outbreak in Chile and how any wider quarantine could hit production, although at the time around 2/3 of staff were on site and output was running pretty much where they'd been hoping and near to targeted levels. In addition, Chile has been in the throes of debating a new constitution after social unrest and discontent with President Piñera's rule last year. The referendum on a new constitution has been delayed, however, owing to the pandemic. Besides those bigger picture issues, analysts will then home in on several different factors. The first is production and the cost of that production. In 2019, Antofagasta produced a record 770,000 tonnes of copper and reduced its net cash cost to $1.22 a pound. At the start of the year, management guided to output of 725,000 to 755,000 tonnes at a net cash cost of $1.30, with byproducts of gold and molybdenum on top. July's trading update left production goals unchanged, but cut the cost of guidance to around $1.20 a pound, thanks to careful cost control and also a weaker Chilean peso. Secondly, analysts will look at profit. For the full year, analysts expect pre-tax income to drop by around a half to $680 million. So that rate of decline is your benchmark for the first half, when Antofagasta made $763 million a year ago. The third number to look for is capital investment, budgeted to be around $1.4 billion initially in 2020, compared to $1.1 billion last year. But it would be no surprise if Antofagasta was to be looking for savings there. And then finally we come to the dividend. Antofagasta originally declared a final dividend of 23.4 US cents a share for 2019, but later slashed that to 7.1 in response to the pandemic, for a total 2019 payment of 17.8 cents a share. Analysts and investors will look to see how the first half payment compares to last year's 10.7 cents a share, and management does remember have a minimum target payout ratio of 35% of underlying earnings per share as a dividend. I hope that you and your families are all in good health and good spirits during these difficult times. Thank you for listening, and I look forward to talking to you again next week.